What's up guys, RB here with the Compound Trading Group. Today I want to bring you a video on Anchor VWAP, how I've been using it. Do I trust it? Do I not trust it? How you can use it. I hope you enjoy. Alright guys, so we're going to look at SPY. This is Friday's price action. I believe it was August the 5th, maybe? Yeah, August 5th sounds right. Just want to kind of give you a breakthrough of how I use Anchor VWAP, how it's been saving me, how it really is a confluence for my trades to let me know if I'm buying it at a good spot. And so just break right into it. This is kind of what I like to do. Let's close that. All right. So what I like to do is look at price action. As we know, we had a huge gap down. On a 1 minute chart, we gapped down, some buyers stepped in for a little bit, we gapped even further down, and then we finally found some support. So what I like to do is I like to take this tool in TradingView. If you don't know, on the second tool down, if you click that arrow, it's on the very end. I like to hit favorites to put it in my toolbox up top. But it's that tool right there. I'll grab it, and I like to anchor the candle where the sell-off took place. So like if this was the last push by the buyers up before the seller stepped in, let's anchor that. Once you have it anchored, you're going to come over to the settings. And in these settings, you will see source. I like to have bands multiplier number 1. And I come to style, I turn lower band, upper band, background off, and then I leave these clear, price label. So if we come back to inputs here, this source right here, what you have is this means high low divided by 2. This high low close 3, open high low close 4, high low close 4. What I like to do is I like to use low and high. And the reason I'll do this, I'll show you. So if we have this candle here, I have templates set up. I don't know if y'all know how to save a template. Here's how you do it. You just click, after you select your Anchor VWAP, you click this button right here. Change the settings how you want it, the colors how you want it, and you can save a template. So now I can just click high, and as you see, what it did is changed my source to high. So this is my anchored VWAP from the high of this candle. At the highest point, the buyers were able to push right before the seller stepped in. I anchored VWAP, so now I have an average weighted price on a chart for that time frame, from that time frame forward. And so what I like to really do is see these sellers in live action of how they're holding control. Do they still have control? You can a lot of times see this way before you get to the price action on chart. So what I like to do is anchor that. And then, if you have another, like right here, we have a consolidation period and another drop, you could come and select a high anchor on that. And then you see we have consolidation. And as we see, they're consolidating. You had a little wedge kind of that was broken to the upside. So I would come down and get an anchor on this candle low here, the lowest push. And I'll change my source to low for that anchor because I want the buyers now. I want to see how the buyers are holding control. And as you can see, as we worked into the morning, but right before the bell opened, we were using this anchor as support. The buyers kept stepping in every single time. They were pushing it on support. So, we had a little trend going here, a little uptrend line going here. And as soon as the bell opened, we stepped down right before into that anchor. And as soon as the bell opened, we took off. I did not play open. The reason I didn't play open here is I wanted a little confluence in open just in case sellers stepped in. We could have a false push into this support and then aggressive sell-off. I didn't want any part of that if that happened. I would rather miss out on the first morning run to find some confluence to add into a trade. So what I like to do when market opens is I like to take the opening candle and anchor it. And what you'll notice me do is I have something here called normal. And this is just the weighted VWAP. So if you look at my source, it is high, low, close 3. That is how VWAP is averaged out. And so HLC3 is what you want to set and make it open. And this is just your VWAP on the day from opening candle. The reason I like opening candle is the highest volume candle on the day. So I can see from throughout the day just the volume weighted price throughout that day live on chart. Once we do get a trend going, as you can see we pushed up, I'll come in and I'll add another anchor to that candle and I'll change that to low. I do have something called low intra. If you notice, it makes the line a little lighter, so I can have darker lines still on the chart and then a lighter, so I know this is from the opening of the day. And this can be a little overwhelming, guys. If you haven't used Anchor VWAP for a while, there's a lot of lines going on. You kind of have to understand when to delete them, when to get rid of them, when they're still valid. That's kind of up to your discretion. But as you can see, we pushed up, right? We pushed up and we made a pullback. The reason I did not enter this pullback, and I was on a stream Friday with a few people, and I was giving them a little reason why I did not buy this pullback is because we got all the way up here. And as you can see, we made a, if we just mark our market structure, we set a high all the way up here. And we had a low all the way down here. So this is my valid low right here. And so as a pullback to happen, if I was to enter a trade in this area, there's a large gap between structure low and structure high. The risk reward isn't worth it for me. How I like to define that, if I go in a long position and I was to put a long here, and as you know me, I like to scalp out on structure highs, at least half my position, go ahead and take some. That is not a working position. So what I like to do is just drag this down and see, okay, if 1-to-1, how do we get to a working position? So now we had a structure high, which was just broke, right? So we set a new structure high. Here's our structure high. In making that structure high, what we did is create a structure low right here. And now you see we get a pullback. And this pullback happens to come into Anchor VWAP, come into the seller VWAP. What I like to see in these VWAPs is when they're broken to become support eventually. So these sellers went upside down. Price moved back to them and buyers stepped in, keeping them upside down. That's a very bullish move for me. And so this is where I actually entered the trade right here. What I was allowed to do with that is enter right here, and my stop was very close. It was right here. I did say when I got in mentally that I would work it down to the intra low VWAP. So I came in long position right here. My max loss was right here. And I want to take out structure high. As you can see now, we are working in a 4-to-1 trade. This is why I love Anchor VWAP. Old me would have got in here, and it would have been great. I got in, I'd have scalped out. But as you can see, this position with theta, I probably would have been upside down right here. I could have held through it, but it's a riskier trade. Risk is all the way down here for me. And there's just not a defined, like I could have risked here, but you see how I say I could have? There's nothing defined in those terms. With this entry, what I like to do is have confluences. So if I were to look at a 3-minute chart at the same time, sorry, TradingView never puts me at the same time frame. So if I was to look at a 3-minute chart at this same time, we have fair market gap, right? We have some liquidity. We have an order block sitting right here. There's liquidity waiting for us to grab into. So we did have that sitting there. I would have had that marked on my chart. I have another one actually right below that, which this is why my stop would have been the intra anchor, because you can see there is another liquidity block sitting right here, that could have pushed into this one. That's why I would have got in here, but I wouldn't have stopped into there. I would have stopped maybe down here just because of this liquidity sitting here. But so as you can see, as we work into it, you can see we have some liquidity. We have Anchor VWAP. We now have defined risks. We have an easy entry into it. And if things go wrong, we have an easy exit out of it. And so that just gives me a peace of mind. It gives me those sections where my brain fires and says, execute, execute, execute. These things happen, so execute. And so you get a push, you scalp out half right here. And what I like to do at that point is I like to come in and I like to anchor a low on it. And as you see, we push up and we pull back into Anchor VWAP. So now we have a structure high here. We have a structure low here. And then we have a lot of liquidity sitting in here. So as this pullback, you could grab this anchor if you weren't already in. And you would want to risk off VWAP because that's where you bounced last time. So you don't want to risk off VWAP, going to structure high. Let's check that trade, see if it would have made sense. Risk into here. Target into here. We are still 2-to-1. That's a pretty good risk reward. I know with options, it's not a 2-to-1. Options don't work like that, but it just gives my brain like a check. Is that a good risk? Like, okay, fair market value. If we were to take fair market value, we're right on to fair market value, so we're still getting a value price. The Anchor VWAP usually gives you a value price. That's what it's good about, is letting you know, are you overpaying? Are you underpaying? How are you? So if you got in here, okay, let's take it out. Let's take structure high out. Did you take structure high out? Yes, you did. So now what we'll come do, anchor our next spot. As you see, you get a pull up, you get a high right here, and now you have structure low. So in your pullback, for me, this is for me as a trader, I do not buy this. What I have done through back testing and many hours of looking at Anchor VWAP, we are extended. I don't know how far off EMAs you'd be extended. You're riding the 9 on a 1-minute chart, but you're pretty far away from the 20. The good chances are you come see the 20 at any time, because that's your 5-minute pullback to the 9. So if you were to just look at this, you see how we start getting extended. This is the plays where I don't buy. I want to get Anchor VWAP. I want to get back into this range here. And so, as you can see, I would not take this. It's just not a value trade to me. The risk is way more than the reward. If you got into here, you see if you just took out structure top, look how shallow you are. So for me, I don't buy that. It's just, to me, it's not a valid trade. But if you do, come and anchor your next location, right? As you see, even your next pullbacks are still way above Anchor VWAP. So that's my first sign, is just, okay, let's just let this ride out and we'll find a better value, right? Eventually we'll get a deeper pullback. Eventually we will shallow range and have a good risk reward, but these 3 areas are not it. So right in here. But as you can see, what we are doing is we are creating a trend line, right? Let's just take this trend from here. This is a good one right here. So as you see, we get a trend line. So we go up, we make a high, right? We break that high. So now we have a higher low. We're still in an uptrend. We push up, we break that high, and then price action fails to break the high. And as you're failing to break the high, what do you see? Trend line break. So this is the first sign that, okay, on a micro, probably 30-second chart, you did have a change of character. You don't on the 1-minute chart. You could maybe make this a low, depending. That's more micro to me. But you are seeing you're felling the top, right? So now you have the potential to go into a ranged market, so which would be from here to up there. So this could be your range right here. Work down, bounce off, stay in the range, or it could be a reversal. So the first signs we see, is we get a trend line break. So now if I switch this over and start anchoring the top, right? Because we fell to top. And we don't know this till about right here. So you don't, you just anchor it. You come back. Once you're in here and you see this play out, you come back, anchor your top. You can add one more anchor to this high here that failed. And so now you get your push down. Pull up. This right here to me is not a good risk reward trade. As we said earlier, you see how far away you are from Anchor VWAP. It's just that risk reward isn't there yet for me. So now let's just let this play out, right? You get your push down. Right here, you go down, make a new low. Here's your low, and now you get a pullback into VWAP. So to me, this is your first trade opportunity. If we were to look at a 3-minute chart, check confluences, check what was happening on a 3-minute. As you can see, we had liquidity sitting right here. Liquidity sitting right there. That's an easy trade for me. And you get the perfect pullback, and you work down, right? So you get your pullback, you get in, what you want to do is take out liquidity. So now what we're going to look for is structure low. Take out structure low, which we do. We took out structure low. We come back, we anchor this point. If you weren't in here, you could get in here. Right here is another opportunity to get in. And these are your risks, right? You want to risk right above. We got in off this pivot, so you want to risk right off these pivot anchors. So you keep your wrist tight. If they were to break, you just get out, take the paper cut. So now you get your push down, right? You cut on structure low, or if you have multiple contracts, maybe you cut half your contracts, you let them ride, you get a pullback. As you see, this pullback is right into Anchor VWAP, into your anchor here. So here's a valid entry off failure, any of these really, risking up to here. And you get your sell off, and what do you want to do? You want to take out structure low. You take out structure low. And so there's another win, right? Another category. And then we can anchor this last one. You work down, you create lows. You don't buy this one. This to me is not a good pullback. Although, as a breakout trader, you see this anchor here. What happened? You broke, you came support. Broke, came support. So you see how you did that. Boom, boom. You could have taken that play. To me, the risk is just a smidge higher. It's not bad. You do have some risk here. Like you could make that trade work. It's not the worst trade because at least you had some confluence. But you know, you get a push down and you get a pull back. Now, where do you get a pull back? Into anchor VWAP. And to me, this is a better trade. Not only do you retest this structure again, if you did get in here and didn't cut here, now you're upside down. But if you just, you know, you wait for anchor VWAP, now you have tight risk, big reward. So you go down, take out lows again. And then we come back and we anchor this VWAP. And so as you see, same thing. You get a pull back and you're pulling back into anchor VWAP. So you could get in here. Still a good trade if you weren't in yet. And what you want to do, this risk reward is a little skewed. You're tight here, small risk, but you could start coming over here and taking out liquidity, right? You could look at these targets, make trades work. That depends on the trader you are. To me, it's a clean setup to get in. It is shallowing a little. That's a little sign to me that maybe sellers are getting a little weaker. But as you can see, it paid off heavy. But what you did is you got in, right? So now we come back and we anchor that candle. So you get a pullback here. You could get in right here. You're still shallowing. So if you are trading on risk reward and you want to take out a structure, you see how you're shallowing. But now you get the sell-off. So we anchor that one. Now, as you can see, everything below this is far away from anchor VWAP. See how far away you are. These are not advisable shorts down in here to me. I like to get back to liquidity. And so with that, what I like to see, is start looking for patterns. What we did do there is create a massive range. Way up here is range high. Way down here is range low. And I was about to say I could see this failing to make a low, and now you're in a big ranged market on the 1 minute chart. 1 minute range is never fun. But if you were to, there's a line already there, so we'll just use that. It's actually VWAP. So if you were to look at this ranged market, it's a pretty big range. So now you have to go in range trading mindset, which is scalps. But as you can see, you had a trend line going down. You kind of broke that trend line. You had a micro change of character. You have a double bottom right here. So you could be looking for a reversal into here with that double bottom. So what I would then, after seeing this price action right here, I would come down and flip my anchor, right? You'd put a low anchor on this, and we'd start seeing how buyers are stepping in. And as you can see, buyers start supporting. What do you see? You see support step in, they send it back up. You get a pull back, support is still in, so we could anchor this candle here. You have liquidity right here, and you send it back up. And now you're fighting all this liquidity in the 1 minute range, right? But if these bother you, could take these back off and play liquidity game back up. You could use these as targets, which I do. I don't remove them, but I could see how it could blow your head up. So if I just go through and remove them, let's just look. So if you do get in, like this anchor right here, say you got in right here on this touch here, you got a very good risk reward play right here, very tight. Like you could even come down to this structure and it still be a tight. And what you want to do is start taking out liquidity, right? There's liquidity there. If we're looking at range top being right here. So you could get in here. What you'd want to do is come back, anchor your next candle. Here's another pullback into anchor VWAP, very tight stop. Your range is down here. So you see how tight that stop is. You want to go in, take out this liquidity right here. And that's a win. And so then we'd anchor this next candle. And you get a pullback, right? Here's your pullback happen, and you could buy this. This would be a good buy. Right here, you get a wick candle. You see liquidity. You see buyer step in. Now, this is where it gets, right? This is the tricky one. There are losers in trading, and structure lows down here. Depending on how you traded this, I probably would have cut this for loss. Not just me. You failed a top. You got in, and this would have been a loser. In my sense, I probably would have took this here and I probably would have cut it down here. But this is my point with this. Even with the losing trades, if I take this, right? Oh, it's the wrong way, my bad. That's a very small loss, guys. And look at your size of your winners. Like I just showed you 1, 2, 3, 4. There you could have got in a losing trade here. So 5, 6, 7, 8, 9, 10 out of 12 trades, there were 2 losers, and these losers would have been very small using this anchor VWAP because you have a risk protection. You can afford 2 losers trading like this, guys. It's just how risk reward works. The faster you figure this out in trading, the better your career will be. So I would chalk this up as a loser. It's a losing trade. What I see here is a failed top. I would say we're going into range, but since we are already in a ranged market, like these aren't uptrends, these are micro uptrends, right? Because you're already in a 1 minute range. That's very important to know. But you know, it happened. So there's a loser. Boom, chalk this up. Now we could switch buys, put an anchor high on that. We don't know if this is pushing back up, so we'd anchor high. And you could grab this right here, work it down to structure low. So if we did that, let's actually just go and replay. That's not a bad idea. I should have done that from the beginning. So say you grab a short here. Grab a short right here. You have a stop. You could grab here if you weren't in, but you know you wouldn't have got stopped yet, and you want to go take out this structure low. So you get paid, right? So now what do? We come back. We're going to anchor our next location right here. You got to touch. If you got in, that's your call. You could have got in right here. Here's another one. We're going to take out structure low. This is where your value is getting skinny again. So guys, it's up to you as a trader how you trade this, because risk is getting, you know, everything's getting tight. You still have a very small risk, but your reward's getting a lot smaller too. So you got to know that. But you did make money there. Now, if you didn't take money there, you just lost money. So this could be a loser. We'll cut that in the loser. Like I said, guys, losers happen in trading, right? Now, what we do know we have here also, this could have kept you out of that trade if you saw it, is a trend line. So you're getting to a trend line bounce. Maybe don't take a short here knowing this is here. It's once again, but we'll just chalk it up as the losers because we were just going by anchor. So now we got to break a structure again. We are still in a range market. This is micro break a structure when I say that, guys. But as you see, you know, we got to push. So let's just go on and see what happens. All right, so now we got double bottom, right? Double bottom. So we come back. Let's delete these anchors. So get them out of the way so they don't confuse you. And we can anchor this bottom candle, and we can anchor it to the low. So you get to push into it. You could buy that. You got a lot of liquidity sitting here to stop off of, a trend line to stop off of. And what you would want to do is work out and take at least this liquidity here. Or the range high would be another good liquidity. I can't even remember how this chart happens, so we'll see. You do have a lot of volume here to deal with when you get there. So as you see, there's a lot here to deal with. I would cut some here, maybe next target here, but you got some to deal with once you get there. So now you get to push, right? Boom, boom, you take them out. Man, that one paid. See, guys, this one right here just took out all those losses. It really did. And when you cut that fast, because now you have clear cut zones, guys, you see this one win took out all of that mess. So this is what I do love about this. But we can come now and anchor this one. Let's get rid of these up top so y'all don't get confused. Let's just get rid of these. Okay. So now we got a new anchor. Let's just keep going. Keep going. If you had some runners still left on the table, you are banking. See guys, this pullback, it's not a pullback I would take. It's not a bad pullback. You just broke structure. But what I would love to see is this to come back down and retest this structure top. Right here, I've got a huge risk reward, kind of. You could make a structure top here. You could do a stop based on that low there. You could get in right there. It's not the worst, but you'd have to cut that quick. You couldn't work it back down to here. But that's just me. But what I would love to do is maybe anchor one of these to see what happens, because I think we probably would retest that structure base, but maybe not. All right, so you get back down into this. You do get a wick. You could take this. I don't know if this would make money. This might be a little paper cut loss. Come down to this maybe. Maybe this becomes your stop right here. Yeah, that's not bad. You could even come down to this one. Still not bad with your reward being structure high. Ah, there you go. You made money. Stayed in the trade. See? That was a little, that one would have had me on edge a little bit. I don't like felling tops. You see how you failed to make a high. A lot of times that tells me range, which you did. You went into a range market on 1 minute chart for maybe 20 minutes. It probably feels like eternity on 1 minute chart, but you did. But you held that low, and you pushed up, and you made a new high. So it's another winning trade. Oh, we need to anchor. So we need to come down. Let's anchor the low here. And we could put one on the low here. There we go. You get a test, right? So we could hop in here. You'd want to play it tight into these. My guess is still a lot of liquidity sitting down here on that structure that you never retested. You do have this thing going that you're testing also. So now you have a really tight range. You'd play it down to this anchor VWAP. You wouldn't want to go any lower on this trade. You'd want your cut to be right there. You could come down to this structure low here. That's pushing it just in case you sweep. But now you widen your loss. I'd rather cut it quick, 84% it, but that's just me. Let's see what happens. Yep, there's your loss. All right, boom. Now we're going to retest. So this is in the loss category. As you can see, you got a double top here. Even though you set a structure high, you still got the double top. This was my signal. I've seen this a lot, guys. There's a lot of theories that have going on out there with this. When you fail to make this high, this right here is liquidity sweep. They're sweeping buy side liquidity. And now they're pushing down. My guess, they might work this lower, but is to come back to the liquidity down here on this structure high. But as you can see, if you do come back to this as a double top, you actually have a failed double top right here that you could have went short. You could come back, look at this anchor, and now you can start working your anchors back down. So now let's get rid of all these that we are working down. So you did have failed trade there. That's very important to just keep in our books. I think there's been 3 failed trades to like maybe 12 winners. But, a failed trade's a failed trade. So if we look, we work down, we got a high, low here. We could anchor this candle here. You get a test into it. You could buy it, push down, take out. Liquidity's not much. You could come down to this, but, and then we could anchor this here. And you're starting to get a little far away. So for my liking, there's not a good trade in there. You could find one, but for me, there's not. I like to get into the liquidity, right? Let's get into the anchors. So right here, we got a clean pullback. We set a low, pushed up. We failed that to set a lower low. We did set a lower low, but it's kind of failed. If let's look at it on liquidity sense here, we were pushing into anchor VWAPs, so you could buy that. You did break. That technically would have been a win. You could buy this. Let's just see what would happen. And technically a win again. Jeez. Okay. So, oh man, you got a good nice push on that one too. So that set a low. If we came back, we could re-anchor this candle here. Now you're pushing into that candle, so we buy this. This isn't how I trade, guys. I'm just using this as an example with anchor VWAP. I look for A+ setups within this, so I do this on a day-to-day basis, but I like to look for A+ setups within it. Like if I was trading and saw this setup happening here, and we pushed into these anchors started becoming resistance, and we pushed back into an anchor, fell a trend line. I might have took a short here. That's a better setup to me. But I'm just going with pure anchor VWAP right now just to show you how anchor VWAP, you can see who's buyers in control. See how VWAP of the day kind of took over here. They bounced on VWAP of the day. So there's your bounce. And they played games, right? You lost money to come back. Would have won money if you held through. But it's just not how I trade. I would have had to break that. And that would have been a losing trade just to watch the market sell off right before it. It happens, guys. Part of trading, right? But you did see these became resistance, wick candles, wick candles, wick candles. There's a lot of short sides in that on structure top, so maybe you take a short there. But as we do know, we do need to anchor that. All right, so here we go. Boom, back into an anchor. So we could buy that. And that's a losing trade, right? For my liking, that's a losing trade. And you're kind of in a range. So you're setting range again. And guys, I haven't been market structure, so maybe there's more tell signs within. If you watch my market structure videos, there's probably better tell signs of what's happening here. But you fail to take out a bottom, like up here. You fail to take out a top. You push down. Now we could go break this bottom again for a liquidity trap setup. Let's just see what happens. See, boom. Now you work back up. So guys, you get the point. Y'all got the point with anchor. I showed you a lot of examples. Market maker playing games. You fell bottom. Here's you a new ranged market. You finally break out of that range to work back up. What you did have happening here is higher lows, but within a ranged market on 1 minute. So now your microstructure, you could have found a pattern to trade off of. There's probably a J plus sitting in there. But that's how you can use anchor VWAP as confluences. Like once you get through these, get them out of your way. Unless you're like me and want to use them as liquidity on the way up to have cut targets and stuff like that. But on a 1 minute, I don't want this many. I look on my 5 minute pivots and I'll go back and delete the ones that aren't 5 minute. And so if you just clear it back up, what you could see in that work back up is, you mark this one as a low. See, here's you some anchor VWAPs to buy off into, right? This is a good value right here. And then you work back up and you would anchor on your way back up. Clear out, anchor on the way back up. You could buy this one. You could buy this one. We'd want to anchor this. Yeah, right there, buy that one. Then you'd want to anchor this, right? And you'd want to see value holding. Like you're still in good value because now you're playing off the anchor VWAP. And now your market structure has good value. Like here's your low, here's your anchor. You're right into your low. So now you have a very small cut. And so we could anchor that. And what you'd want to see is just the anchors hold. And like you get the push, boom, you sell into the liquidity. And you see, guys, this is just how I use it. It's easy trading. I don't like trading strategies. I like price action. But what this is allowing you to do is have a strategy while you're learning price action. Like you start seeing these moves and you were in a downtrend. You failed to make a bottom. You pushed even further down, stopped them out, failed to make a bottom, and now you rip back up. Like that's price action. And you start learning to where you can see this naked, blind. You don't need all this. But this gives you a good visual. Who's in control? You're seeing power shift hands live. So like even in this move, like if you were just to take, okay, buyers, let me clear drawings. I'm not going to clear it. Let me delete everything I have here. Because I want to keep all my old stuff. Okay, so like if we're just looking at buyers, right? Buyers. Well, if you came in and you anchored sellers, start back here, high. And even in the same pivots, high to low, look at the pivots. You're watching control be swept live. Buyers supported. Sellers fault. Buyers supported, sellers lost. Come back into it. Buyers support, right? And then the sellers become support. So now you keep pushing. So if you just kept going and you anchored the high and you anchored the low, buyers support, sellers resistance, sold off resistance. Buyers supported it, sellers lost. Sellers came support, went back up, right? And then you came back down. Buyers are still support. Sellers are fighting, but buyers are support. Buyers win. And you see, you just get a live picture of price action happening. And if you come in and just pair that market structure, right, the things we do know, you had a high. That high was eventually broken. That created this low. And then you have a new high. And that high is broken. That made this a low. And you're making higher highs, higher lows. And that's what Anchor VWAP is showing you, right? Higher highs, higher lows. And you're seeing the live support. So guys, I hope this helps. This video is a lot longer than I wanted it to be. But it's just a way to look at it. Do not use Anchor VWAP live without back testing. It will blow your brain up. There's a lot of lines on these charts with Anchor VWAP. But what I think it eventually can help you do is learn to see price action live. The goal eventually is to not use Anchor VWAP. Maybe you use it on a few pivots, like 5-minute pivots, and maybe it's a natural VWAP lines and you just want to see it live. Like, guys, it's the same as EMAs. These are confluences. These are areas of interest. The goal is to learn price action. The goal is to read the tape and see it play out live. But this is just a prime example of finding good entries that have a good risk and a good reward, and not get in a trade that has a terrible risk with a terrible reward. We're risk-based first here at the Compound Trading Group. Like, we want a tiny risk. We want paper cuts and big winners. And so, guys, I hope this video helps. If you have any questions, feel free to DM me in the Compound Trading Group Discord. If you're not a member of that Discord, find the link in the description. Join us today. We teach like this on the daily. We have fire call-outs. We're not a call-out Discord group, but we do have fire call-outs. And I hope you like and subscribe to our channel. Enjoy.